Hello, everybody. I'm John Locke, and I'd like to welcome you to the LockeInYourSuccess.com Trading Performance Podcast, where it's all about real traders, real problems, and real coaching. Listen up and enjoy the segment.
The key to exploiting your edge, knowing what the edge is, fully understanding the trades, the ability to construct a trade that's capable of exploiting that edge, and the proper mindset and discipline to act in your own best interest. And this is the other key part, appropriate for a trading psychology webinar, is that proper mindset and discipline is critical in order to do this. And we start talking about proper mindset and discipline to act in your own best interest. We're talking about creating and following plans. Okay, so I see what's going on in the marketplace. I see where I might have edge in the marketplace. I'm going to create a plan for that, and I'm going to follow my plan. That's the biggest thing, right? So most of the times when we create trading plans, we are in a better position mentally than we are when we're actively in the trade and we have money on the line. Okay, in other words, if I don't have any money on the line, I might be excited and that might be influencing my emotions, in which case I would check that at the door. You want to be relatively neutral emotionally when you're creating a plan. You want to decide how much money you're willing to risk. Okay, a lot of the problems with traders is that they're not freely willing to risk and lose a reasonable amount of capital in order to enter the trade. In other words, they either feel they have to win the trade or they don't consider the consequences of losing the trade. There's always a chance you're going to lose that trade, regardless of what you do. And you need to understand that. It should be at the forefront of your mind. And you should be freely willing to risk the amount of capital that you're putting in the marketplace, or whatever you designed it, whether it's through your exit loss trigger or through your structural risk. You need to be freely willing to lose that amount of capital. It's a lot easier to be freely willing to lose it before you enter the trade than once you enter the trade, right? I'll give you that as a key, right? But you need that has to be part of it. If you're not, people will either think they can't lose the trade, or they'll kind of forget about or ignore the fact that they might lose the trade, or forget about it, right? Not purposefully, because your mind does that. Your brain automatically goes to, I'm going to go in this trade because I'm going to make $5,000, not thinking that you might lose $5,000 or whatever it is your number is. You want that in the forefront of your mind. You want to be okay with it. If you do that and you create a plan around that, and you're willing to lose that money, then you create the plan before you get emotionally involved with it. And you understand what the market's doing. You know where you are in the economic cycle. You know where your price pattern cycles are. And you've purposely chosen this plan. And then you put the trade on and you follow your plan. That's going to be the best way, or the way that you're going to make the most money in the marketplace. The problem comes in is twofold. One, right? So another aspect of mindset is willingness to act or withhold action, especially when uncertain, afraid, or excited. So you need to be able to create this plan. You need to have the willingness to take the loss if it should come your way, and the willingness to actually take the action of putting the plan on. And then once the plan's underway, you need to have the willingness to act or withhold action based on whatever your plan was. Right, so someone will come in and they'll ask me the best thing to do. Should I do this or should I do that? I have to go back to, well, what was your plan? What was your intention of the marketplace? Right? If you're in a condor and you're at one edge of the condor, you want to know, right? You want somebody to tell you, should I make this adjustment now? Right? It's 10 o'clock in the morning and the market's down, and now you're at the edge of your condor and you're losing your profits, right? And you're stressed out about it. You want to know, should I make this adjustment? And I have to go back to, well, what was your plan? Were you planning to hold this position? In other words, when you made your plan, where were you willing to lose? Were you willing to lose if the market continues to go down and stops you out? Or were you willing to lose if the market chops back and forth and you adjust down, adjust up, adjust down, adjust up, and then lose in the center? Because you can lose either way. We don't know what the market's going to do in the future. You could lose either way, you could win either way. We don't know. And now you're under mental stress and you're making these snap judgments based off of emotion rather than trying to stop a loss that you don't know if it's going to happen or not. It'll lose if the market keeps going down, but you don't know if the market's going to keep going down, right? So that should have been decided before we entered our strategy. If I decided to lose if the market continues down and the market continues down and I lose, then I did the right thing. I made the plan with the information I had at the time. Now you could have plans that change dynamically after you enter them, but you want to have the plan to change the plan. In other words, hey, if the market sets this lower low, then it continues down and breaks, so I have a swing high and a swing low. So I have a swing high, the market went up and it didn't make the swing high, and now it hit a new low. And now my initial thesis for entering the trade, right? So I have an initial thesis for entering this trade. I'm entering this condor because I expect the market to stay between here and here. And I expect it, when it is between here and here, I expect it to act in a certain way, right? I'm making sideways or whatever. So I have these expectations lined out, which is wonderful. The trade starts, the market is acting normal, then all of a sudden it makes a lower low and it breaks lower than I thought it was going to break. I should have already determined what that means. I should understand that could happen. I should determine what it means. Now, when that happens, am I going to now change my trading strategy? If I am, I should have already decided that before I entered the trade. I should have decided, well, if this happens, I either exit the trade, or I can also choose to hold on and hope that my thesis plays out in the long run and wait till stop out point, right? So I could use a technical stop out point, or I could use my dollar stop out point. But again, that should have been decided ahead of time. Or I could change my trade strategy. I could say, well, if this is going to happen, I flip back into an M3.4U or something. I change my condor into an M3.4U, and then I play it out that way because these are my new market expectations. But I knew that pretty much ahead of time. I'm not deciding that now. There's a big difference between having market expectations, seeing those expectations fail, and purposefully shifting your position. There's a big difference in that, between that and saying, oh shit, I'm in this condor, I just expected it to win, and now it looks like it's going to lose and the market's going to keep going down, so I'm just going to make this adjustment so I don't lose. Ideally, you already decided that was your losing scenario and have place out. You're going to do a hell of a lot better that way, because a lot of the time when you make that adjustment, the market goes back to where it was and you end up losing a trade you would have won if you just followed your plan. That's proper mindset and discipline with that.
And that is what I have for you today. If you have any questions or comments or anything else you'd like to see in the next Trading Performance podcast, please list that in the comments and I'll personally answer your questions and comments for you. Also, I'd love to encourage you to come on over to lockeinyoursuccess.com. That's LOCKE in yoursuccess.com, and check out our Trading Performance and Pro memberships, where you can find the tools you need to become a much more effective trader, regardless of the type of trading you do. Thank you for joining me. I look forward to seeing you on the next Trading Performance podcast.